the Moneyweb Crypto Podcast, where we discuss all things crypto related. Your host, Kieran Ryan.
How serious is the threat of South Africa being cut off from the global banking SWIFT system? To be clear, the South African Reserve Bank says there's little risk of the country being cut off from SWIFT, but there is a risk of certain individuals being excommunicated from the system. The SWIFT system is the lifeblood of international trade. It's a communication system between banks that allow transactions to be processed in a safe and secure way. Cutting individuals off from SWIFT denies them an opportunity to transact across borders. Well, how did we get here? A bill currently before the U.S. Congress, introduced by Representative John James, wants a review of U.S.-South Africa trade relations. It does not specifically call for a SWIFT ban, but we have seen enough international precedent to know how this could go. It may start small and escalate quickly, as happened in the case of Russia and Iran. There are alternatives to SWIFT, such as Russia's SPFS and China's CIPS, but these are slower and considered less secure. To help us understand what this means and what are some of the alternatives available to South Africa in the event of a SWIFT ban, we're joined now by Fadil Motti, CEO of 88. Hi, Fadil. Welcome back again. First off, should we be taking seriously these threats of being disconnected from SWIFT, or do you believe only certain individuals are at risk?
Hey, Kieran. Thanks for having me. It's great to be here. So while it's difficult to comment what is being said behind closed doors, the article suggests that only individuals or entities linked to individuals or certain activities are at risk. We can assume this may be politically exposed individuals or activities with any links to the defense of ongoing hostilities like the ICG case. However, when geopolitical risk enters the financial system, it's never just about individuals. Markets respond to sentiment, and uncertainty alone can be very destabilizing. I, for one, found the headline of the News 24 article scary, and I'm sure many have. For businesses and institutions, it's not about panic, it's about scenario planning now.
Okay, now there's concern that SWIFT is being weaponized by the US for political reasons, particularly over South Africa's neutrality in the Ukraine-Russia conflict and, of course, events in Gaza as well. We can't dismiss these threats against South Africa entirely, particularly as Finance Minister Enoch Godongwana apparently raised this concern in a closed-door meeting with the banks. So he's taking it, I don't want to say seriously, but he's aware that it could be a potential outcome. Should we be preparing for the worst, even if the worst is vague and possibly years away, or should we just close our eyes and plow on as normal?
Well, Kieran, if you look over the past 18 months or so, South Africa has been impacted by the FATCA grey listing. And that, from my experience, did have an impact on certain transactions. Like, for example, individuals using their allowances to send funds abroad for crypto purchases were limited as to which banking institutions they could send to. Since South Africa went onto the grey list, many of these offshore institutions considered these transactions as high risk or even prohibited, narrowing the flow and restricting the movements. That being said, South Africa's economy is extremely resilient to the pressure, and businesses did continue as per usual. At the same time, it was a great learning curve for South African institutions to tighten the anti-money laundering and terrorist financing gaps it had, which is important to align itself to the international standards for better and greater trade flow. So my view is plow on as normal. South Africa's economy is extremely resilient to these pressures. But building alternatives is no longer just about innovation. It's now about adoption, and South Africa is ripe with opportunity to jump onto these alternatives, of course, when regulation permits.
All right, so let's talk about those alternatives. Cutting South Africa off from SWIFT will be obviously a blow to the economy, but there are workarounds. Just talk about some of these.
There are already options that we see in existence today with payment providers and fintechs. We have seen the emergence of telecom mobile money rails like MTN Mobile Money and in other parts in Africa, particularly for remittance payments. There are various strategies used here. There is also the rise of stablecoin adoptions for cross-border use, which is most definitely an alternative opportunity. when, of course, regulation permits. I do think this is an important time for regulators to invite outside opinion and even fintech leaders to provide insight on how these solutions can be used within the current regulatory framework. There are, however, caveats to this, like restrictions in dealing with prohibited and high-risk jurisdictions, which even is applied to stablecoin use in many cross-border use cases. We're also seeing increasing interest in cross-border messaging layers like SIPs, which comes out of China, and recently PAPS, the Pan-African Payment Settlement System. These are regional and a lot slower, but they can be adopted for trade. The more scalable path is a hybrid infrastructure, in my view, connecting traditional rails with digital assets, stablecoins, and even tokenized liquidity layers in the near future.
All right, I'm curious to find out from your clients whether they have approached you and said, listen, we're a little bit concerned about this SWIFT thing. Do you have any solutions for us? Are you getting those kind of inquiries?
Not yet, Kiran. Mainly we have clients that have asked us, what does this mean for us? Are they still able to transact? And that's because they've read the headline too, which seemed very scary. But when you look at the body of the article, it's obviously very vague and targeted at individuals like we spoke about. And I don't see any companies or any of our clients preparing themselves yet for any of this disruption. But I think soon to come, if this gets a lot more escalated in the near future, then definitely we'll see clients taking an adverse approach.
Yeah, I mean, we've seen this with Russia and Iran, where it starts off with a wave of sanctions, and you could say tariffs is a form of sanctioning. Then it tends to escalate if the United States doesn't really get the end result that it's looking for. That seems to be the blueprint for countries that find themselves on the wrong end of U.S. foreign trade policy. Would you agree with that?
Yeah, I definitely agree with that. And it is a very hostile environment, unfortunately. So we have to be wary about where we step and how we step. But then again, there are these alternatives that we can start focusing on.
All of this, I guess we could agree, it's coming at a time when decentralized payment systems using crypto rails are really making massive inroads into the world of finance. So the technology is there to bypass SWIFT, but South Africa is working hard to get off the grey list, which you mentioned already, and it's trying to demonstrate that it's no safe haven for terrorism financing or money laundering. But South Africa is not alone in facing these threats. In India is a case in point. It's facing 50% tariffs on goods entering the US on a huge number of goods, and potentially faces more tariffs because it buys oil from Russia. So these are what they call secondary sanctions. In other words, there's a tendency for this to possibly escalate. Do you see the same happening with South Africa?
I think South Africa has to walk a fine line. And that means embracing innovation while demonstrating strong regulatory controls. The reality is, Kiran, anything can happen. And as we can see here, it happens quickly. Decentralized rails are becoming necessary, and it's either we shape the narrative or get shaped by it. We need regulators to work with fintechs like ourselves and other leaders in the market to implement these new rails responsibly.
All right. So we've talked about stable coins as a possible workaround if there is a SWIFT ban. Now, I mentioned the technology exists, but we have a little bit of a regulatory vacuum there with stable coins, do we not? What, in your opinion, is required by the regulators so that we can potentially prepare for a future in which we have to use multiple different payment systems?
Yeah, I think most importantly, it boils down to written regulation first. If regulators take a more proactive stance towards these threats, companies can most definitely prepare themselves. It's then important for companies to audit their dependency on any single payment rail. Do their counterparties that they're paying or being paid from rely exclusively on SWIFT? And the second would to build redundancy around their treasury infrastructure, which means exploring these alternative rails. I think we are close to regulatory developments and finally engaging with fintech platforms that provide the solutions
And would you, in your company, would you be approaching the regulators and say, hey, it's possibly time for us to start discussing the possibility of being cut off from SWIFT and what we as a country can do about it?
Most definitely. And what's positive is that regulators are opening the door. Most recently, we've seen the SARB acquire BankServe and the SARB wanting to crack the bank's monopoly on payment clearing, which invites non-banks and fintechs into the arena for payments and settlements. And I think that's a very positive step for us to talk with regulators and to even provide insight and opinion as to how these technologies work and how they can suit the current regulatory framework. So we're definitely taking a stance at that, and we have been preparing ourselves over the past couple of months to align ourselves with new movements.
Right. And I see the banks are obviously aware of this, but they're deferring all questions to the South African Reserve Bank. So we're operating in a bit of a vacuum here, although Nedbank does seem to be considering that there may be a need for new payment messaging networks that'll operate alongside SWIFT. And you've mentioned SIPS and the Pan-African payment system as well. Is there a way that these systems can interact already, or is this something that is going to have to be worked on in the future?
It's quite difficult to say at this point in time, being behind closed doors. But I do definitely think that technology has escalated and increased in such a way that integrating these new forms of payment settlements and different rails shouldn't be hard to come by. And I guess it all boils down again to regulation. How does the SARB or the regulators see these type of technologies and whether they should exist? And then the next is the adoption layer, which I think can happen pretty quickly if regulation is there.
All right, we're going to leave it there. That was Fadil Motti, CEO of 88. Thanks very much for joining us, Fadil.
Thank you, Kieran. Thank you for the time.
Thanks for listening to the Moneyweb Crypto Podcast, hosted by Kieran Ryan. To listen to our other podcasts, go to moneyweb.co.za or the Moneyweb app and follow Moneyweb News for daily updates.